So Saruhan, he says we're going to keep the patient alive, and that's exactly what the ECB is doing. That's exactly what the IMF is doing, and to some extent, the Germans are playing along with it for now. Is there going to be a point where the Germans say, look, enough is enough?
I think they will. It's the first time Beri actually in July started talking about the probability of a Greece exit from the euro, not a possibility anymore. We've been approached by clients who asked us to devise alternative plans. Investors are looking at it seriously, and I don't think they're seeing much of a hope that Greece is going to stay in the Eurozone, and we're preparing accordingly. But it's going to be a chaos in the short term. If you ask me when that's going to happen, that's a very difficult question to answer, really. But buying time, you can do it only so much. The end is near.
Henley, that's a bit of a concerning comment in terms of the end is near, because I think what he's referring to is basically the exit of Greece and the disruption of the current Eurozone as we know it now. As an investor, do you have any contingency plans in the event that that would actually happen, or is that in your forecast models at this time?
Well, we have U.S.-based investors for U.S. markets, but I think what we've been looking, especially at the accredited investor space, is that cash balances continue to be at all-time highs. And I think that will continue as we go through the U.S. presidential cycle in a couple of months, as well as Europe continues to unfold. I think cash as an expression of where we want to be in the market is what we're looking at. And our clients continue to keep anywhere between 10% plus in cash just for contingencies at this point.
Henley, I want to ask you, I mean, this topic has been ongoing now for nearly 2 years. And in the past 6 months, we've discussed the probability of whether or not Greece leaves the Eurozone, whether or not Spain has to ask for a formal bailout for the entire country. Is there a bit of investor fatigue in all of this?
Oh, absolutely. I think here in the U.S., we want this all wrapped up in a nice little package and go away yesterday. But I don't think there's any real, this is a very difficult situation, a very difficult problem. And I believe the only real answer is time. And I agree, time is running out. But I do think that the Eurozone will stay together. I think that it's in their best interest. I understand the math and I understand the politics, but I do think the Eurozone will stay together. It will be the ultimate solution.
Saruhan, you both agree that the Eurozone will likely stay together, at least in the near term. What does that mean for multinational firms, whether you're in the United States or you're in China, as you look to strategize how you're going to attack global growth?
Well, if they're going to stay together, Phil, I think investors would want to know how. And what are the plans that are going to be implemented? How is Greece, how is Spain, how is Italy going to implement those plans? Right now, we're seeing short-term stimulus to stock market because weak euro is also helping corporations, especially those that have a high cost base in Europe and doing a lot of sales outside of the region. But that's also dependency on profits based on exchange rate. So they're going to want to know the details of the plans and how easily, if at all, those plans will be able to be implemented across these countries. I think that's the #1 question that they're going to ask. And they're not convinced now because we're hearing all these talks, just buying time. And at some point, they're going to say when.
All right. We have to end it there. Saruhan, Beri Consulting, thank you very much. Henley Smith, Commonwealth, thank you very much. Well, certainly this is not the last we'll hear of this particular story.